we've got 4 of the 11 largest cities within driving distance of each other, but yet they're not even really collaborating. And so our whole mission is to just begin to unleash all this new value, billions and billions of dollars of new value, by just allowing startups and mentors and advisors and investors to move between these markets that are in driving distance of each other.
The startup investment landscape is changing, and world-class companies are being built outside of Silicon Valley. We find them, talk with them, and discuss the upside of investing in them. Welcome to Upside. Woo! Hello, and welcome to the Upside Podcast, first podcast finding upside outside of Silicon Valley. I'm Jay Klaus, and I'm accompanied by my co-host, Mr. I Love You Alive Girl himself, Eric Hornung.
Are you comparing me to Jeff Bezos now? I know that in previous episodes you said that I compared myself to Jeff Bezos, but I don't think I've ever texted anything as creepy as that to another human. I hope I haven't.
Oh, I said this in the Slack channel that we had. The texts from Jeff Bezos to his mistress, they were so, I guess creepy is probably an apt word, but they weren't like overtly gross. They were just strange.
It was like Alexa was trying to learn how to text.
It was like a machine learned text message to a lover. It was weird.
Like he's iterating and doing like A/B tests, and these are the ones that leaked out.
Maybe trash talking Jeff Bezos is not our best move.
Yeah, but saw how that worked out for the National Enquirer. He released a Medium article, which I'm sure everyone listening to this podcast has either read or seen, pretty much just saying, yeah, you have some pictures of me. All right, go for it. Release them. You can't blackmail me. I'm the man.
Also, as Twitter found, the National Enquirer's website runs on Amazon Web Services. I don't think the Upside Podcast runs on Amazon Web Services, though, although our hosting provider probably does.
Well, that's because we're anti-fragile, Jay.
Yeah, we are very intentional with the strength of our show and our resilience in case we have some enemies in high places.
Yeah, in case we ever have a run-in with Jeff Bezos.
Just in case.
You always got to plan for that. Very important.
Eric, we've got an exciting episode here today. We are venturing back into the great state of Texas. We spoke to Dr. Ty and Courtney Caldwell of ShearShare and Astral AR, but haven't spent a whole lot of time in Texas, and we're going back there today.
Yeah, for how big the state is, for how many cities there are there, I feel like we got some exploring to do.
How much time have you spent in Texas?
I have spent 2 straight weeks in Houston once, where I went outside for a total of 20 minutes because my office, it was in the middle of the summer, my office was connected to the hotel I was staying in, and there was a bridge that took you from one to the other. Also, Houston is connected by underground tunnels downtown. So I was in Houston, but I really didn't experience anything other than my cubicle. I've spent some time in Austin, which I thoroughly enjoyed. And I've been in the Dallas airport multiple times. So, and one other thing that I've done is I went to El Paso, and I actually really enjoyed El Paso.
I've got a good view of Texas. I've spent a few weeks there in Austin for South by Southwest. I also strongly associate it with strange wildlife because a friend of mine who's a management consultant has met with, I don't know if it was a client or someone on his team that has a huge property down there and apparently just has all kinds of wildlife on the property. And they went all around on like an ATV just looking at these things. That it just sounded like a real life zoo.
Like, are you talking like they had like geckos that run on water, or they had like elephants?
I'm talking close to the elephant. I'm talking like large, I forget the name, like almost caribou, but like exotic animals that just live on this property.
Real quick aside, there is a place in Sedona called Jungle Safari Zipline, and it is a very similar thing where they have Bengal tigers, and they rescue all of these exotic animals from personal farms, and they bring them there to Arizona, which I think is crazy because I think they have a polar bear or something. I'm like, what is that polar bear doing in Arizona? It just seems like a bad place.
Yeah.
But you do a zip line, like 15 of them back and forth over the top of all of these animals. Random aside there, but
that sounds awesome.
Yeah, it was pretty cool.
Well, today we're going to be speaking with Bryan Chambers, who's the vice president of Accelerator and the investment fund for Capital Factory. Capital Factory is, quote, the center of gravity for entrepreneurs in Texas. The Capital Factory Incubator is a seed stage mentoring program for startups that provides weekly mentoring sessions with mentors and investors who have built, scaled, and sold lean startups themselves. Capital Factory itself is based in Austin, Texas, founded in 2009. They've made 114 investments to date, have had something like 11 exits out of those investments. But Bryan is based in Dallas, and I believe he is starting a Capital Factory office in Dallas.
As Ohioans, I am very excited to learn about Texas. I think it is one of the similar states in terms of relative population. So I think that Bryan's going to offer a ton of insight into an ecosystem, into a statewide ecosystem that I have very limited insight into right now.
If you guys have thoughts as we go through this episode, be sure to tweet at us at UpsideFM or email us hello@upside.fm, and we'll dive in right after this.
Hey guys, wanted to cut in here real quick and let you know about something Jay and I have been getting ready behind the scenes in 2019. When we started this podcast, Jay and I said that you, the listener, would have an opportunity to learn in real time, to think like venture investors with us as we meet a wide variety of personalities and examine a wide range of industries. Well, now we're going to share something new, and it's a little different. This new idea is called The Update. It's a carefully curated quarterly publication of editorials, trends, and stories happening outside of Silicon Valley. Jay and I will be writing stories about what we're learning about on the podcast, have guest editorials on interesting topics, and share news and updates from our podcasts. In some cases, we may even share some exclusive content or first looks. Our goal is to stay at the cutting edge, and of course, bring you along with us. We're super excited about it and know you're going to love it. If you want to be the first to hear about our Q1 launch and subsequent letters, go to upside.fm/update to get on the mailing list.
Bryan, welcome to the show.
Thanks. It's good to be here, guys. Thank you for having me.
Great having you. We like to start on Upside with getting a bit of background on our guests. So can you tell us about the history of Bryan?
Sure. I'm Texan, born in Houston. When my family moved to Dallas, relocated to Dallas, in a little area outside of Dallas called Flower Mound. And when we moved there in the kind of early mid 90s, there wasn't much there. You know, we were lucky enough. Our family got a boat, and I got really good in the mid 90s and the late 90s. There was a big trend. Everybody was migrating from a sport called water skiing over to a sport called wakeboarding. I was lucky enough to have a boat, and I got really good at wakeboarding. It was a hobby that I had and developed and had a lot of fun doing. And at the age of 14, when I was turning 15, because my birthday's in April, I remember very vividly turning 15, going into the summer. I launched a professional water sports school, and I built my first business. This was a lifestyle business, and I had a lot of fun doing it, made great money. It was everything about it. I didn't really recognize that I was building a business when I was doing this, but everything about it would impact and influence my life quite a bit. And so it was highly seasonal. There's not a big demand for wakeboarding in January, so you had to manage cash flow. I got to build a team and manage drivers, and all of a sudden rep sponsor brands and so much, and build strategic partnerships with the local boat shops to procure customers. And so all of this stuff gave me some really early entrepreneurship lessons, I would say. And I didn't realize it would have such a big impact on my life. But I went to school locally at UT Arlington. I did my undergraduate and graduate degrees there, my MBA. And I would say one of the unfair competitive advantages that I had when I was going through school was that in the Vantage seat as a student, I had done something incredibly entrepreneurial before. And I had a little bit more of a propensity to take risk, which is why most people don't do a lot, entrepreneurial things a lot of times. And as a result, I really just knew that if I didn't really want to go take a job or do something I didn't want to do, I didn't have to do it, and I could just keep wakeboarding. So that was a cool experience. It was really impactful on my life. And then from there, I was in and out of a couple of startups. I tried a couple of things. Most of them crashed and burned. I went to work for a company called ReachLocal, and the company IPO'd in 2010. And that's when I really got addicted to that, hyper growth kind of tech culture.
How good were you at wakeboarding? Take me back. Were you good? Were you awesome?
Yeah. So I would say I was pretty good. I was good locally. So I was one of the better riders probably locally in the North Texas area and in the state of Texas. But Texans would for the most part would get our asses kicked by everybody out from Florida, and California was had some great writers as well. So I think maybe it was like 2002, I was the only person from the state of Texas to qualify in one of the Vans Triple Crown wakeboarding series that was actually here in Texas to make kind of the qualifying round. And so, I was good, but I wasn't good enough to build a really great career out of it.
How did you have the worldview to understand what starting a business was at age 15? Did you have entrepreneurship in your family?
I didn't know that I was really starting a business, and I didn't really have the foresight to understand that, I was going to build long-term relationships with customers and build a bunch of strategic partnerships. But what I was lucky enough to grow up in a family, and I had the first opportunity to have access to a boat and be near the water. It wasn't a great boat, but it was a boat, and it was a way and a place to start, and we had a lot of fun. That's really what I was focused on. I started to recognize that I would go out and hang out with all my friends, and I would teach them, and I love doing that. And people love to see me wakeboard, and I love to wakeboard, and so that was a lot of fun. And so I ended up building these camps where I would take mostly children, but oftentimes adults too. And I would take them out and I would teach them. And we were 99 out of 100 times we would have success on the goals that we would set for the wakeboarding lessons. And oftentimes very early, but half of the time everybody just wanted to see me wakeboard. And so I would get out there and get paid to wakeboard.
That's awesome. If Jay and I come to Dallas, will you give us a quick lesson on how to wakeboard? Because I tried one time on Lake Erie. I'm from Cleveland. And I was not great.
Yeah. So we would be one of the only people out there, I think, wakeboarding these days because everybody's surfing. But I would be happy to do it as long as it's, May through September.
So at this time, what does your understanding of the Texas or Dallas entrepreneurial ecosystem look like, even through the time that you're going through ReachLocal around 2010?
Pretty non-existent. Dallas has been a corporate market. The North Texas industry has just been defined by, I think, just coming off of kind of the big telecom boom. We used to be the telecom corridor. And I think what ended up happening was a lot of the big venture investors along the way, they got lost and, they're began to have some dogs in their portfolio. And so we had a particular area known as the 16th floor at the Galleria Tower. And this was where the bulk of the highest concentration or density of the venture capitalists existed. And all of them ended up going away. And they were co-invested in a lot of the same deals together. This was around the 2008, 2010 timeframe, after the bust. Not a lot of the portfolios survived. And we lost a lot of momentum in the venture capital community. And so there wasn't a lot of activity happening and going on in North Texas as far as the entrepreneurship ecosystem, although it's always had that potential. I think the North Texas community has been a little bit more defined by what's happened in energy and what's happened in real estate. And outside of that, it's been really interesting to watch North Texas find a little bit of an identity back as a result of innovation and a lot of entrepreneurship now. So it's taken a while, but over the last 10 years, it's really, really emerged.
So you were with ReachLocal at IPOs in 2010. What are the next steps for you, having figured out, okay, I really like this experience, I really like this fast-paced sort of world of tech entrepreneurship?
So I left ReachLocal. I convinced, one of the things I like to say, I claim I've always been good at my whole entire life is I've been good at recruiting teams and recruiting people and throwing events. And I leveraged these two things to help every aspect of my career. And so I was able to recruit kind of on the heels of the IPO and the successful IPO, the founder and chief technology officer of ReachLocal, who's got quite the track record stemming back from days with Apple to other organizations. He announced he was going to retire, and I had approached him and I said, Rick, let's go do something together. Let's get involved in a startup together. And we did that. So we supported a startup that was based out of Texas. And Rick, even though he was living right outside of Boston, spent time, regularly came in, and we joined together and were helpful in building this startup. We had a little bit of equity in the startup and we had some success. And so I was able to exit at a very early age from this company. The name of that company was Sensei. And we built kind of a video e-commerce platform, although it was very, very early and the company's really gone through a whole lot of changes.
Was that in Dallas or did you change location at that point?
Yeah, so it was in Dallas, and it also had a big presence in Austin as well. So it was kind of, the offices were bifurcated between Dallas and Austin.
Take us forward now to today, being at Capital Factory. Help us close that gap.
at that moment, after that happened, and I was young, I was 26 years old, and I had kind of had my first, small liquidity event from being in a startup, and that it was just a complete whirlwind for me. And right there, I mean, I knew it was as clear as daylight. I just knew that there were two things I wanted to dedicate the foreseeable future of my career to. And that was one, helping as many people as I could go through that. It was obvious to me nobody gets to do that by themselves. And so, we had a big team of people, and there were a lot of people that were critical to that journey and story. So one, I just want to help as many people get through that. That was crazy. And I want to be on the other side of the money, and I want to start selectively investing in the very best ideas and the best entrepreneurs that I could find. And so I began doing exactly that. I started making investments in technology companies. I began to learn a whole lot about how to invest into companies and the types of entrepreneurs to work with. Everything I've done has aligned with those two goals: help as many people as I can and invest into the best entrepreneurs that I can find. And so, anything that's given me an opportunity or a platform to do these two things, I've invited into my life. I've taken full advantage of those opportunities. I found an opportunity to invest into a deal also out of Boston. This was one called LevelUp, which had a pretty big exit. And I learned a lot from this deal. It was sold to Grubhub last year for $390 million. And some of my friends and I worked together to get a position in that company. And I helped start another company and took a position in this company out of Dallas called Fixed Repair. This is about 3 years ago. So I was active in this company, taking a role, also an investment position. And we actually just announced on Thursday this week that we sold that company to Angie's List. And so that was a Dallas-based company. And that got announced on the Angie's earnings call. And that was a 3-year journey, which was, something I've been working on all along the way. And that was one I was particularly focused on. But also while I was doing this, I was invited to build and manage a partnership between the University of Texas at Dallas, which is an incredible local university, very technical university here, and a large one, and a private equity group by the name of Blackstone. They have the Blackstone Charitable Foundation, and as a specific entrepreneurship initiative. There was something that was so obvious to me as an outsider and a practicing entrepreneur and investor, now getting embedded with a large education institution, higher ed institution. And it was that the business students stay in the business school, and the computer science students stay in the engineering computer science school, and the arts and technology majors stay over in their school. And this was really problematic, especially because the entrepreneurship resources were in the business school, hence neglecting a large part of who we might consider to be some of the highest potential entrepreneurs. And so what we did with the grant that we received from the Blackstone Charitable Foundation and this new partnership was we built this independent facility on campus that we call the Front Door to Entrepreneurship. And we changed the culture around entrepreneurship and innovation, and drove a campaign and a culture that invited people of all majors and all disciplines and all genders and so forth to step in and really look at entrepreneurship and have entrepreneurial experiences that would help them explore different types of career paths. And so that's what I've been doing in connection with the university for quite some time. And along the way, I was also asked to teach, which actually blows my mind a little bit. But I'm still a professor at the university, and we've got some great courses. My pedagogy, my teaching philosophy is actually one where I act and serve a little bit more like a facilitator, and I design experiences for students.
I want to come back to this partnership in a second, but going back to when you had your first liquidation event at age 26 and you say, I want to help more people do this, and I want to find the best ideas and the best entrepreneurs to invest in. What was your thought process about geography? You stayed in Texas. You could have moved anywhere probably at that point, at that age. What was the thought process?
Yeah, I did. I did stay in Texas. I've always lived in Texas, although I joined a company out of Denver, Colorado. I took an active position in this company. You can only be active in one or two things when you're doing it, because it really consumes you, but you can be passive in a whole lot of different things. And so I began to be passive in a bunch of Dallas-based companies. I was active in this payments company out of Denver. And then my roots brought me back to more active things based in Dallas. And so I had help the main operational founders of Fixed help start the company and get it up and going and get our initial capitalization, and then turn to Dallas. So really my network has been, is in Dallas. I think my reputation has grown in Dallas as well. And so I don't think it's a surprise that, most of the opportunities are here locally. I think that Texas in general is just benefiting from some big trends. I think that's really the big part of the central United States in general. As we look to trends, something in particular that we call the flyover states. Historically, the East Coast and the West Coast have been very dominant in these innovation areas and the financial capitals and hubs, and especially where venture flows. And now the center of the United States is really no longer being ignored. And so there's specific funds and new initiatives that just focus on what historically have been called flyover states. And I think Dallas and Texas is just one ecosystem that's benefiting from this.
When you made the transition from entrepreneur to investor, you mentioned that there were a lot of things that you learned. You hinted that it was kind of a big transition. Can you break down what that first investment looked like after when you kind of transitioned from entrepreneur to investor?
Yeah, I can. The first one that I made was on a uncapped convertible note. And basically what that means is, we have a particular type of investment strategy that's really popular in Texas. I think it is popular across the United States, but in particular, we love to use it in Texas in early stage deals. And it's debt that ends up converting based on a few key triggers into, a future equity position in the company. And usually one of the most important terms in a convertible note is what the valuation cap, so what's the ceiling going to be. So you actually have some sort of prediction as to what your ownership is going to be. And I actually participated in a first note. I actually was influential in negotiating, and it didn't have a cap associated with it. And so as this company began to win a lot of investment and gain momentum, their valuation increases, and we kind of shot ourselves in the foot because the valuation inched up. And when we should have negotiated a ceiling against it, we ended up paying the price for it. In the grand scheme of things, I've had a multitude of lessons like that I think theoretically and conceptually you can understand when you read a book. Oh yeah, everybody should have a valuation cap, but you really learn what happens when you don't. I began to learn the hard way about how rare it is to join a startup and really gain momentum and have a lot of success. It's very hard, especially as you build big teams. I'm a believer through my own experiences that all the problems really exist because they're people problems. They're not really technology problems. And so, at the end of the day, I had a lot of different experiences that led me to believe that, I'm gaining a lot of knowledge about what it takes to build a culture to satisfy investors that's going to go on and win, future institutional growth rounds and so forth.
To break that down for the listener, when you don't have a cap on the note, that means that you guys basically did not get as much value back because you became more diluted. Am I understanding that correctly?
Yeah. So look, if you're putting the first $1 million into a company and you can negotiate, if you negotiated a $4 million cap, you'd have a $4 million pre-money valuation plus the $1 million from investors. You're going to have a $5 million post-money valuation, and $1 million of the $5 million post-money valuation is 20% of the company. So if we were to negotiate on day one, hey, there's going to be a cap, and we're never going to convert beyond the cap. So we would know what, if everything goes well and we're performing really well and the company's growing and there's going to be this future event that's going to convert our debt position to an equity position, you understand at worst case scenario what you're going to get. But when you don't have a cap, but the company gets all these resources and then raises money and then goes and wins customers and then ends up an investor comes along and negotiates a position way later at $20 million or $40 million pre-money valuation, we're now converting at the same terms. We could have negotiated a cap way back on day one that gave us that formula. And so in the meantime, we actually gave the company the ability to create all that value. And they did. We ended up paying the price for it a little bit. There's a lot of experiences, a lot of tricks like that along the way that you understand how these vehicles work, and you understand how they work against the entrepreneur and for the investor or for the entrepreneur. And most importantly, you really understand how to build investment structures that create alignment at the end of the day. Everybody has got to be working in alignment. And if anybody's incentivized to do anything against an investor group or a portion of the investor group or against the entrepreneurs, it usually happens.
I guess I have a theoretical question that I'd like to hear your take on. You're a professor, so you're teaching this stuff, but so far it seems like you've learned most things through experiences. So are these kind of, I think you called them tricks earlier, is this something that you can learn and then apply and be smarter? Like, is there an on-ramp here, or is it as much as you read and learn and study, you're just never going to get it unless you do it?
Well, I think the right answer is it's a combination of both of them. And you've got to be doing both all the time. Theory is not good unless you have practical application. Theory is always changing and evolving. And so what I do when I say I design experiential education, one of the courses that I teach is venture capital at UT Dallas. And we created a practicum. We call it the UTD Seed Fund. We don't call our students, we call them venture associates. There's a ton that try to apply to get in the class. We accept 10 in the class. And now we also have an executive MBA section of this class too. So there's about 10 in each program. And we give them a budget and we tell them to go make an investment. And it's real money. And this was actually how I met Courtney and Dr. Ty was through this process. And they were the very first investment that the students selected and the students made. And I nudge a little bit along the way and we read real documents, safes and convertible notes and Series Seed term sheets. And then we, they meet with the customers and they meet with the entrepreneurs and they dig deep into the product and the problem and they go through a due diligence cycle and they understand. And so we're reading and applying some theory about deal structures and terms and investor education, but they're really applying it mostly throughout the course of the semester. That's
an awesome program. I wish I would have had access to something like that. How rare is that?
It's very rare. Me too. I wish I would have had access to it. But to be honest, it's my dream course. I just had the ability to, along with some other friends and some local folks to Dallas, Fort Worth, we got together and we donated money into the program for UT Dallas to create this, education opportunity. I mean, it's really just the class I would want to take if I was a student. And so as the professor, as the facilitator, that's what I set out to build.
So you begin this partnership in, looks like 2016-ish. You get to Capital Factory around 2018. So talk to me about that opportunity, how you came to Capital Factory, and what that looks like today.
So shortly after I joined the university and I was building and managing this partnership between the Blackstone Charitable Foundation with the university and standing up kind of this new program, I had the opportunity to meet Josh Baer. Josh Baer is the founder and CEO of Capital Factory and one of the most relentless leaders, startup champions I've ever had the pleasure to know. And I sat down with him at dinner one night and he said, "Hey guys, I'm thinking about Capital Factory in Dallas. What do you think? I'm thinking about Capital Factory, expanding outside Austin. Can it work here? What do you think?" We had a really healthy discussion that night about, the differences between the Dallas community and the Dallas ecosystem versus the Austin ecosystem and how we might approach this idea. And leaving that meeting shortly after, I became an investor in Capital Factory first and foremost. And so Josh just convinced me, said, "Hey, you really want to learn about what's going on? Why don't you become an investor and let's just start working together that way?" He convinced me to do that, and it was probably one of the best decisions I've made. I began to learn a lot about the thing I'm most passionate about, which is being a great venture investor. And my deal flow began to increase, and my investor network began to increase, and I had access to a lot of great opportunities and, through the Capital Factory. And so I just really fell in love with what I experienced and was bringing a lot of value to Capital Factory as well. And so in 2018, Josh had asked me to get more involved, especially with the grand opening of a new facility and a new program and the expansion into Dallas. So I took Josh up on that opportunity and I joined as a director. Directors are like really active advisors at Capital Factory. So you're involved actively every single week working on things with Capital Factory. And then from there, things just began to blossom even more. So, I was thrilled and humbled to be invited to kind of run the investment practice and run the investment business for Capital Factory. Capital Factory is a very unique organization. We have this internal joke that we just say, Capital Factory is fully buzzword compliant. We are a mentor network, an accelerator, a co-working facility, a venture fund. We have an innovation council. We have a lot of different aspects to the business as well. But it's a very, very unique organization with a unique mission. And so it's been a lot of fun to get behind this mission.
So talk to me more about what it is that makes Capital Factory unique from a mission standpoint.
So first and foremost, our focus is on Texas and Texas entrepreneurs. Those people that are from Texas or are native Texan like myself, we actually know that if we all cross the border, if you've got somebody from Fort Worth, from Dallas, from Austin, and from Houston, and we all cross the border to Oklahoma or California. We let everybody know we're Texan, and we all looks like we work together really well, and we have a lot of Texas pride. And but the second that we get back to our own communities don't even work together that well. And we have this thesis that kind of runs and guides our organization called the Texas Startup Manifesto that was authored by our CEO. And it basically goes like this. It's, that we've got 4 of the 11 largest cities within driving distance of each other, but yet they're not even really collaborating. And so our whole mission is to just begin to unleash all this new value, billions and billions of dollars of new value by just allowing startups and mentors and advisors and investors to move between these markets that are in driving distance of each other. I don't think that's such necessarily a novel idea or concept, but operationally, it's really hard to do. So, Capital Factory's been the champion to put people on buses and planes and throw events across the whole state to connect these communities and make sure investor dollars are moving and startups are getting support. All of these communities, all these major metropolitan areas I just mentioned, they're incredibly different. They're incredibly unique. They offer very different core competencies. A lot of the talent and the tech is in Austin, but all the customers are in Dallas. All the old money is in Dallas. All the real estate and money's in Dallas. All the industrial technology and the energy tech and most of the healthcare tech, it's all in Houston. But all the consumer products and the consumer mobile apps, and it all happens at Austin. And so, they're so different, but just allowing these communities to work much better together is what we do. That's our mission. With that said, we're focused exclusively on working with Texas-based technology companies.
So you kind of just gave a little run through on Dallas, Austin, and Houston. What about like San Antonio, El Paso, Corpus Christi? Are those also within the mission, within this manifesto? And if so, like how would you define those competitive advantages for those cities?
We're focused on Texas and Texas overall, and it's a big part of our culture is to wake up and we don't think Dallas, or we don't think Austin, or we don't think Fort Worth, or we don't think San Antonio for that matter. We think Texas. And we're kind of one accelerator, one team, one venture fund, one brand, working to elevate everything in Texas. And so, of course, this means it extends to all the other cities. And, very actively, we're going to events and we're attending events and we're bringing the brand, to Waco and doing things with Baylor. And we're getting out to Fort Worth and doing things out there and up to Frisco, Texas, which is way up north. And so there's a lot going on, and it does extend and transcend to these other growing cities. But we've got to pick places to start, and those places to start were to outside of next to Austin build the next facility in Dallas, and then we've got a micro presence in Houston and a micro presence in San Antonio through some strategic partnerships, and we're working on building one in Fort Worth. And so these are the places that we've started, but we're inviting people from El Paso to come into Austin and to come into Dallas, and Waco and Corpus Christi. So it's certainly not limited to those, but for the most part, we're not necessarily conducting a roadshow from Dallas to Corpus Christi, but rather inviting and making sure we're extending and including Corpus Christi in the things that we do in Houston, right? So that's how it's working right now.
What do you feel are the unique Texan strengths?
Yeah, well, Texas is big, and that's its strength. Texas is, if it were a country, it would be the 10th largest economy as a country by itself. As a result, we've got 4 of the 11 largest cities, which is Houston, San Antonio, Dallas, and Austin, and there also happen to be 4 of the fastest growing cities in the United States. They also happen to be incredibly close. They happen to be incredibly different, and so I think Texas is incredibly diverse and has every industry represented. I think these are all incredible strengths. Oftentimes a lot of lists come out. And on these lists, we almost always find at least 2, if not 4 cities in Texas on this list, the best place to build a startup, the best entrepreneurial ecosystems and so forth, the fastest growing, companies, the most Fortune 500 companies and so forth. And so we're always on these lists, but somehow Texas is incredibly underserved in venture capital. Texas only receives, despite being the 10th largest economy in the world, if it were to be a country, we only receive 2% of national venture capital. It's California that, takes over 50% of national venture capital. New York is the second market. Massachusetts is the third market, and Texas is a pretty distant fourth. But Texas is so strong. It's got the fastest growing GDP of every state. Everybody's moving to Texas. People from California and a bunch of the investors, they're showing up to Capital Factory looking us in the eye saying, we can't even tell entrepreneurs to build a company in California anymore. So why are we there? And they're moving to Texas. And so I think all of these are the strengths. But, I also just pointed out probably the biggest weakness is that Texas is so underrepresented. It only gets 2% of national venture capital. And we think that's a big problem. And so we're on a mission to help change that by elevating everybody in Texas and all of the ecosystems in Texas. And we collaborate with every other incubator, accelerator, all the venture funds, all the universities in an effort to help Texas and Texas entrepreneurs.
What is your guys' thesis for how to bridge that gap and how to make you more represented in terms of venture capital? What's the order of operations that you think will work?
So first and foremost, I think it just, we don't even have to leave Texas to accomplish this mission, right? What I stated earlier was just by helping the right customers and mentors and investors in San Antonio get connected with their respective counterpart in Dallas. That alone creates a ton of value between two of the largest cities, right? And if we just start moving that value, our ecosystems flourish. And so it's really, I think what's really going to accelerate it is when people from outside Texas turn to Texas and say, wow, we really need to be participating in this ecosystem. And that's happening. And we see it every day. But I think it's going to it's going to continue to happen at a pretty aggressive rate. And we're here to help people from California or Colorado or Utah or Florida or New York find and navigate Texas.
So there's been a continuing trend of talking to people from New York and California. You said people from California want to come to Texas because they can't be starting companies in California. But Texas has a lot of organic money, right? I think it's number 3 in terms of number of billionaires in the United States. There's a ton of old money in Houston and Dallas. 2% seems so low to me of money in venture. Is that money just sitting on the sidelines, or is it sitting in old industry, or is there a cultural lack of an appetite for risk in Texas? Why does everything have to be looking outwards?
Yeah, so yes, for most of those questions, but it's changing. And this is not a light switch. It's a generational change. Over one generation, it's the pendulum will swing fully, and we'll observe this big shift in money from sitting on the sidelines, or has been historically in private equity, or it's been in real estate, or it's been in healthcare. All of these things are digitizing, are being disrupted by tech. Real estate tech was the company we just sold to Angie's List last week was disrupting the real estate technology sector. Real estate is a huge value chain, from materials to mortgage to insurance to payments to, you name it, brokerage and the real estate agent. All of these things are getting disrupted. Dallas in particular does really, really well in real estate. All the home builder, a lot of the big home builders are here and so forth, and developers. And so I think what's going to happen is these industries are, to some extent, they've been laggards to innovation. With that being said, I think we're just now seeing a lot of kind of old and patient money learn and kind of find its way into these industries that are just kind of late to blossom and find a lot of technology adoption. And so we think new generations are turning over, and younger families and younger children are more interested in tech. They're not as scared about it. But historically, I think the risk has always existed in oil, right? Oil was the venture capital, the original venture capital of Texas. And that's starting to change as well, as just, tech becomes more and more familiar to everybody, and all the old family offices and private equity funds and so forth in Texas.
You're an investor yourself, and you're in Dallas, and now you are joining this Capital Factory effort to be wholly Texan. I would imagine there are points in time, and you can tell me if I'm wrong here, I would imagine that there are points in time that you make decisions that are driven by, I want Texas to flourish, that are not necessarily perfectly aligned with your own immediate financial interests. Does that ever happen?
Yeah, I think, of course, one of the great things about Capital Factory is we have all of these other parts to our business that augment and help ecosystems. So it's not always at the brunt of the investor. We have all of these corporations that on an innovation council, and they're historically, they suck at working with startups. They kill startups, right? And so, and they come to Capital Factory and they turn to us and they say, we need an innovation strategy, and we need a culture that's acceptable for startups. And we need to not kill them when we work with them. So please help us work with startups really successfully. And so we've got large corporations who are the customers, right, for a lot of these startups. We've become this big marketplace with lots of different sides that includes, mentors that are super capable to helping startups and these big corporations, the startups themselves, the investors, locally, externally to Texas, everybody's invited. And with all this being said, I mean, we're creating all these collision points all along the way. And a lot of times it's expensive and it's hard to do that. And we've got to really invest in big infrastructure. But luckily, we've been fortunate enough, and our leadership team has done a really good job building a very unique brand and a culture and an operation and a business model that supports various ways to do that. And we're always friendly to the startup. It's always, we try to do things never at the startup expense and always at the expense of the corporation.
This isn't a question so much as just thinking out loud as we're going through this interview. You mentioned earlier the importance of alignment and making sure that people are incentivized to do the things that you want them to do. But, as we talk city to city to city, as they're trying to grow their city and these community builders, these community champions are doing that, it always strikes me that the people leading that charge are putting their own personal financial incentives aside a lot of times to do that. And I'm just trying to think through, how do you mechanize that and weaponize that to do that for all people in the ecosystem and actually create the alignment of incentives to say, this is why you need to do things this way because it'll make Texas better, and not have it just be out of pride.
Yeah. It's definitely a shift in the way people think. We see every day great people and great leaders in Dallas wake up and think Dallas, right? And there's nothing wrong with that, but we don't think just Dallas. Dallas is a hugely important part of our mission, and it's in a very important ecosystem. But we think Texas, and Dallas is a really important part and has an important story in elevating Texas. And so we just start to push that culture on people. It takes a while for people to shift that thinking, but it's really a bigger calling, and it's a bigger way of thinking. It's really requires you to elevate your thinking. But I think operationally, we do that by putting 200 people on one or two buses from Austin and getting them all to show up to Dallas. We're doing that and getting them all to show up to Houston. All of a sudden, when a bunch of investors and a bunch of VCs from Austin show up to Houston and say, "Hey, we're here and we're ready to collaborate. Let's collide and let's talk and let's evaluate deals and let's work together." You observe it and you see it and you get it. You go, "Oh, wow, great. We really can collaborate in ways we've never done before."
The first time that I was aware of Capital Factory was a startup crawl at South by Southwest. And so Eric and I are going to be at South by Southwest this year, and it's on my mind. I would love to hear what the effect of such a massive festival has on Austin as a city or Texas as a state.
Yeah. And we've got a bus going from Dallas to, that a bunch of startups and a bunch of investors and mentors are going to be on to go experience South by, because there's still tons of people outside of Austin that just don't really take advantage of South by. And so just helping new startups and new investors and so forth tap into that and give them a strategy to take advantage of South by. So it's a huge opportunity. It's a big part of culture in Austin. It's a big part of Capital Factory. It's just so lucky that Capital Factory, it's right in the middle of Austin. We are a hub for South by Southwest. And so we're in the middle of the action every single day. And we're constantly throwing a lot of public events, a lot of private secret events, that we throw. It's a really helpful part of our mission, quite frankly. But even again, just turning to Texas by itself and allowing people from no matter where it is to help give them a strategy to come to South by Southwest, participate, and it not cost an arm and a leg for them. I mean, it's, for the startups, that's something that we're doing. But you're right, the startup crawl, it's a huge event. It's a massive event. And that's how I think Capital Factory's been so successful in growing a brand and in building a culture, is having some deep roots in South by and leveraging, a lot of the stuff that happens there.
So you mentioned earlier that if you look on any list, Fortune, Forbes, whatever, there's always at least one or two Texas cities, best place to start a startup, best place for business, whatever. And I think that people have a pretty good look into Dallas and Houston and Austin from just the size of the cities, the sports, they're hearing about those cities. What are the most underrated cities in Texas, coming from a lifelong Texan?
I think what you're going to find, and there's not one particular city that I'm going to name, but I think just like anything else, you've got these burgeoning ecosystems. And Dallas in itself can be characterized as an ecosystem, or the Dallas-Fort Worth community, right? We're a whole metroplex. And I think when you look to the metroplex, you just find a lot of pockets that are emerging, like Arlington and what Arlington is doing in the esports and the gaming arena and so forth. And when you look up north, and Frisco is doing a lot of the same thing, and Frisco's in sports and sports technology, and the PGA new headquarters just moved there, and it's got every major sport represented in Frisco, and they take a lot of pride in sports. So all the sports tech companies are going there to connect with all the CEOs and the teams and so forth. And so I think you've got lots of pockets that are historically suburbs, like Flower Mound might have been. Frisco used to be hunting territory, not too long ago, and now it's the sports capital, and powering all these new programs in sports technology and so forth. So I think that you look around the big names that we consider to be cities, and we find those burgeoning ecosystems and those emerging suburbs, if you will, that are finding niches in themselves.
Do you guys have any peer ecosystems or states or even organizations that you look to as a model for what you're doing with Capital Factory?
We don't. We talk about that a lot. I think that other people try to sometimes compare what's happening to Silicon Valley with words and things like Silicon Prairie and whatnot, and other accelerators, whether it be a Y Combinator or 500 startups or 1871. But the reality is Capital Factory is not like any of those things. Texas is incredibly unique. It's very different than all of the other geography and other ecosystems. And nobody's really, we're just trying to take advantage of our own core competencies, which is proximity, geography itself, the Texas culture itself, and these huge, huge cities and all the business that already exists. And so I think we've got a formula that's very, very unique. We think we're the best at doing what we do, but we're also one of the only groups that we are aware of that's just focused on Texas. That is, that's our unique strategy. And we don't think anybody's going to really compete with Silicon Valley. Silicon Valley does Silicon Valley really, really well. But all of a sudden, when you get Dallas and Austin and Houston working together like one big super city, I think they can compete with any state or country in the world. And that's really what we're focused on. So, and then whatever happens is going to look very different than Silicon Valley going forward. It's going to be shaped different and look different and have different core competencies. And so we're helping that story.
Awesome. Well, this has been great, Bryan. Really appreciate your time. If listeners to the show want to learn more about you or about Capital Factory after the show, where should they go?
Yeah. So the best thing to do is just to go to capitalfactory.com. One of the other things that you can do is you can Google Texas Startup Manifesto, and you can read all about the mission that powers our organization. We've got lots of influencers on social media, in particular, Josh Bear. He's a good one to follow on Twitter, and you can constantly see some of the live stuff that's happening at Capital Factory. We've got a lot of events that go on in Texas. Anybody's welcome to come to them, whether you're from Texas or not. We have a new partnership that we announced in 2018 with the Army, the Army Futures Command, and we're opening up a new floor in Capital Factory Austin dedicated to defense. This is really, really unique. Not a whole lot of other groups are doing this. So we've got the Army in our building, in our office, working with Capital Factory every single day to collide with startups, saying, we're not good at working with startups, but we know all of them are the future of our country, of our organization, and we need the innovation if we're going to continue to, be the best in the world. Our commitment to defense is also something that's really unique at Capital Factory. But best thing to do is to follow us on social, find us on the website, or better yet, find an event that's coming to one of the cities and go.
So Jay, we just spoke with Bryan from Capital Factory. What are your hot takes?
Hot takes. I didn't realize, I know Texas is big. You gave me some numbers that made it bigger than I even realized. The fact that they have 4 of the 11 largest cities in the United States, did not realize that. That if they were a country themselves, they would have the 10th largest economy. That's pretty crazy. And to still be only receiving 2% of the national venture capital dollars does feel a little bit like a mismatch.
Yeah, I would agree. Everything is bigger in Texas is definitely an understatement here. It's way bigger in Texas. Except for venture capital dollars. I loved this investment class that he teaches at UT Dallas. Yeah, how do we steal that?
I was speaking with the president of Ohio State's Business Builders Club just yesterday, and I was telling him, you guys should look at this model that they have at UT Dallas and figure out how you can do this at Ohio State.
There you go. You're already laying the groundwork. We are Buckeyes, Jay and I, if you guys are new listeners to the podcast. So we really just started this podcast to make Ohio State better. That's the truth. There it is. Now it's officially out there.
So Ohio State, if you're looking to sponsor the podcast. I like this phrase of Capital Factory being fully buzz term compliant as a, quote, very unique organization. It does seem unique. This is something we've touched on a little bit in prior episodes. I think in Stephanie Manning's episode, we talked a little bit about ecosystems and the parallel to platform roles at VC. This is something where clearly it has a large net positive effect on Texas as a state. But I would imagine there are people in Texas who have an axe to grind just because when there is some sort of centralized power that seems like it has some centralized role, people just seem to get upset.
I like the metaphor of axe to grind. I'm just imagining someone out on a ranch in Texas, like actually grinding an axe.
Yeah. I saw in a Facebook group, somebody shared the assessment Techstars had on the Cleveland ecosystem. And a large part of that report was talking about an organization fairly similar to Capital Factory called Jumpstart. And their assessment was that the community was way too critical of that organization and the role they play and the net positive they have on the ecosystem as far as it goes to trying to build a better and more booming ecosystem. They talked a lot about attitude and being open and collaborative with these large powers as opposed to just being negative towards them. And I would imagine Capital Factory faces some of the same things in large ways or in small ways. Hard for me to say. But having that centralized role, it's kind of a give and take, right? You know, it's they can aggregate more leverage and make more good and do things and, you know, bus people from Houston to Dallas to Austin to San Antonio and really connect people. But it just seems to make people in general wary when there is one sort of centralized power.
So before I get into my thought on that topic of consolidation, are you aware, because I'm not, if Capital Factory is sponsored by the state of Texas or if they're doing this kind of bottoms up and kind of creating this centralization?
I am not aware that is sponsored by the state of Texas in any way, and I don't believe that came up in the conversation. I think it's bottoms up, and I think Joshua Baer, who Bryan mentioned, started it, but I'm not 100% positive.
So that's the vibe I got too, is that Capital Factory was created from the bottom and is expanding outwards, which is a different type of centralization than what we have in Ohio. And throughout the interview, I have an Ohio bias. Everyone who's listened to the podcast knows Jay and I have an Ohio bias. It's where we're located. It's where we're from. It's what we understand the best, so it's what we compare most things to. Texas, Florida, Ohio are the most interesting states to compare, in my opinion, because they have this non-consolidation of population into one major ecosystem, and that's a very unique thing amongst the states. So going back to this idea of how Ohio kind of created its centralization, there's centralization within each city. There's Jumpstart, Rev1, Centrifuge/Cincy Tech. And that's because there's centralization of the funding mechanism through the third frontier. So you have this ecosystem that was really created top down in Ohio. And I think the point you're getting to where there might be people who are critical is whenever something kind of gets pushed top down, the people on the bottom are always going to be critical of it because they didn't have a say in it being created. Whereas my understanding of Capital Factory is they started on the bottom and they're working their way up and they have to prove to everyone, like they have to prove credibility. Whereas in Ohio, just by being labeled as that organization and getting that funding, you get credentials. You don't have to prove anything. You have the money, you have the power. So I think Capital Factory is a different way of looking at that model. And maybe that's a Texas ethos of smaller government, create your own thing, more Austrian in terms of economics. I don't know. I don't know that one's better than the other either. I just think it's a different form of centralization. So I would assume Capital Factory does get some pushback, sure. But it's probably a different type of pushback than what you're alluding to in Ohio.
Yeah, and I'm totally projecting. I was really making an assumption that I don't have any basis in from the interview, we should talk to some of the founders that are in Texas and ask them about that when we speak with them. Something that came to my mind as we went through the interview, and I brought it up, when we talk to these different ecosystems, it sounds like a lot of these cities, states are still in a stage where to build the ecosystem, there has to be some level of near altruism. You know what I'm saying? In terms of, instead of it being such a clear, this is the best for business answer for where you should invest your time and money, there's still an element everywhere of, hey, let's do this for Texas. Let's do this for our statewide community. And I don't know if and when that flips or if it needs to. Obviously, you and I are both proponents of ecosystems growing themselves and focusing on their strengths and doing what they can. And in a lot of ways, as we talk to founders, the cities that they are started in have a lot of strong reasons why they were started there, and it's good for the business. But from like an investor community standpoint, it still seems like most of these communities are pulling on some string of altruism or pride for their local geography to really get that flywheel turning.
And maybe that's just how it has to start.
Does it stay that way? Do you think it ever flips?
I don't know. I don't really have a good take on that.
I don't know either.
This kind of loops back to our first point. But Texas is just so big that the cities that don't make the top 4 that like, I think Amarillo is like the size of Cincinnati or Cleveland. So it's just, in terms of population, there's just so much there and so much potential that I see why so many people in real estate and in private equity and in VC now are really bullish on Texas.
That's crazy. I didn't know that. Well, I'm excited to explore more of the great state of Texas. We will be down there for South by Southwest. So if you're listening to this and you are in Texas, reach out to us. Let us know. We'll be in town. We'd love to hear from you. You can tweet at us at UpsideFM or email us hello@upside.fm. If you enjoyed this episode, share it with a friend, rate it on iTunes. It goes a long way in helping bring on good guests to the show. Thanks, and we'll talk to you next week. That's all for this week. Thanks for listening. We'd love to hear your thoughts on today's guest, so shoot us an email at hello@upside.fm or find us on Twitter at UpsideFM. We'll be back here next week at the same time talking to another founder in our quest to find upside outside of Silicon Valley. If you or someone you know would make a good guest for our show, please email us or find us on Twitter and let us know. And if you love our show, please leave us a review on iTunes. That goes a long way in helping us spread the word and continue to help bring high-quality guests to the show. Eric and I decided there were a couple things we wanted to share with you at the end of the podcast, and so here we go. Eric Hornung and Jay Klaus are the founding parties of the Upside podcast. At the time of this recording, we do not own equity or other financial interest in the companies which appear on this show. All opinions expressed by podcast participants are solely their own opinion and do not reflect the opinions of Duff & Phelps LLC and its affiliates, Unreal Collective LLC and its affiliates, or any entity which employ us. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. We have not considered your specific financial situation nor provided any investment advice on this show. Thanks for listening, and we'll talk to you next week.
Never mind, bro, that can't be matched. I'm lighting it on fire, used to run victory laps, and still I'm not even tired. It's all about the timing, yeah, that's what they say. Well, I'ma keep on